also tracking Q1 earnings reports from several major banks this morning. JPMorgan Chase beat expectations, reporting an increase in both profits and revenues. CEO Jamie Dimon said the numbers are strong, but he warned that uncertainties like inflation and war pose potential threats for the future. Javier David is with us now. He's a CBS News contributor and managing editor of business and markets at Axios. So what's interesting about what Jamie Dimon has said, Javier, as you know, is the numbers for his institution are incredibly strong. But he's pointing to these potential risks and potential pressure points like war, like an election. And I wonder, is this a banker sort of positioning the institution to say, hey, I know we look good and we're making record numbers, but to Anne-Marie's point, don't worry about what we're charging you because fees have gone up, but that's because we're preparing for risk that we are taking into account now.
You know, look, Dimon is a very influential guy, and he does this a lot. He always says, yes, things
we're
are
doing
good,
great. We're making billions.
Yeah. I feel lately.
Well, interestingly, the story of this quarter was investment banking revenue. So it's not necessarily what's happening sort of with the small investor, but a lot of these deal making, it's been solid enough for them to make money.
Okay.
JPMorgan, being a massive bank, is able to sort of navigate higher interest rates better than smaller counterparts. Community banks have a hard time struggling in this environment. But JPMorgan being JPMorgan, they can find ways to hedge and make money.
So they can be more attractive.
But he's not that. But all that said, he's not wrong. Inflation really is a very serious challenge. That means that rates are likely to stay higher. That means higher costs for businesses. That means higher costs for consumers. Don't look now, but the price of oil is dang above 90, creeping slowly toward $100 a barrel. Higher prices at the pump. We're almost sort of at the cusp of summer.
Right.
So all of these things converge, and it's going to make it very difficult or challenging for consumers.
So I guess if investments are up, that means that businesses are feeling, even though there are all these pressures, they're feeling positive enough about the future to kind of, go forward enthusiastically.
Right.
So really, we don't care about how much banks are making. We care about what that says for us, right?
Well, deposits are down. Deposits are down. That's interesting because deposits are up.
So then I don't know what any of that means to me. So I want Javier to tell me.
It means higher
should I feel
expenses for the
good
bank.
about the economy or should I not?
Well, the interesting thing in JPMorgan, all of the banks do this weird thing called loan loss reserves. So they stuff money under the mattresses in case things get bad. And then when they don't get as bad as they think, they can release that money. So there was some of that noise in JPMorgan's earnings. It suggests that the fact that things haven't gotten as bad means that consumers are doing well, or at least their clients are doing well enough for them to not have to sock away these loans. And that's a good thing. And, the paradox of inflation is prices are going up, but companies are charging more because they assume that customers are paying more.
And
the demand is out, and they are.
Yeah.
Demand is there. Wages are higher. People are just overall more willing to eat these higher costs.
So then is this a good news story or how do we interpret
It's a mixed news story because it means the economy is strong enough that things aren't falling off of a cliff. We're sort of expecting things to decelerate. We're not going to maintain this sort of altitude forever. But at a minimum, we've got a very strong labor market and it's enough to keep the inflation picture sort of supported. Right. And that's what really everyone's concerned about. That's the single biggest risk out there now. Where do we go from here on inflation?
Yeah, the number that shows that deposits are down at these banks means that ultimately those banks are going to have to increase their expenses, which will affect us. The other thing that, as Javier pointed out, is they also pointed out there's a fall in their net interest income. That's the money that they make when they lend you money for a mortgage. That is down. So the profits are up, but for folks that are looking for a mortgage, right, they're not able to charge what they were able to charge a couple of years ago. So even though we look at it and we say, they're making record profits, what they're really saying is, we may actually be at a point where we may have to charge people more because of
And to that point, mortgage rates are back above 7%. And so it means
that was crazy, Javier.
Fewer people are taking on mortgages because they simply can't afford. Who's going to take out a 7% mortgage?
Right, because we were talking about this. We were looking for a mortgage, and we were like, should we lock in at 6? And we were like talking to our banker at JPMorgan, and he said, well, I'd lock it in because it might go up. And we're like, no, everybody thinks interest rates are going down. Yesterday, he texted us, guys, almost at 7%. Good thing you locked it in.
Wow.
So, yeah, that's where we are.
There's that.
Javier, thank you very much.
Absolutely.